Thursday. So we have natural gas,
We
right?
sure do. We got some action yesterday on crude oil with the EIA numbers. This morning we'll get the natural gas numbers at 10:30, so it's 10:18 right now. Let's jump over and pull up this chart first. So here's natural gas. We're looking at the June contract, currently trading at 281. Start things off with the 11 AMs. Let's just see real quick. So the 11 AMs are going to have 280 that we can use as a point for a bullish spread and a bearish spread. And just out of curiosity before we jump around, so the noons are going to have a similar 280, and even, that's what I was thinking. So we'll get to go through each one of the time frames and see how these price out, because they're all going to have very similar price points. So the 11 AMs, these give us about 40 minutes until expiration, which would be about 30 minutes after we get the news. This is going to be your bullish spread. You're going to have profit potential from $2.80 up to $3. We have about $12 of intrinsic value here, which being the 12 ticks above 280 that the contract is currently trading at.
Yeah.
And so this is going to be costing us $16, which is the 12 intrinsic value plus about 4 ticks of premium. And then on the flip side of that, we're going to have the negative spread going from 280 down to 260. And that one, because it's out of the money, is going to be all premium, costing us about $7. So you're looking at $23 for the 11 AM. And then we'll fast forward. So that's our 11s. We'll pull up the noons. And we'll keep these 11s over here to take a look at how they trade. So then the 280 to 3 o'clock noon. Now the only thing being different here is just that you have the extra hour, right? Same exact price, just the extra hour. So instead of 16, the bullish spread's going to cost us 19. And then on the bearish side, instead of about 7, it's going to cost us about 8. So you're looking at $27, which would be 2.7 pennies away from 280 for the noon. And then one more, let's jump into the dailies. Now these are 50-cent spreads, as opposed to the 20 cents we were dealing with 11 AMs and noons. 50 cents to the positive side, 280 to 330. This one is now costing us 24, as opposed to the 19. And most of that, I'd say almost all of that, is just for the ability to go till 230.
Right.
But you do have that additional, if for some reason natural gas decided to move more than 20 cents today, you have profit potential all the way up to 330. And then on the flip side, looking at our negative spread, that's now costing us 13, as opposed to the noon was costing us 8. So the 230 would end up costing us 13 plus 24, so about 37 cents.
So that's
$37. Or
that's another 10 cents.
Yeah, or 3.7 pennies. And, you know, it's 2.5 extra hours from noon until 2:30. Versus the 11, we went from 11 for $23. We went for the noon for 27. And then we went for the 2:30 with 50 cents, too, for 37. And, you know, we have about 9 minutes till the news. That's your natural gas contract. We almost touched down at about 8 a.m. too, right at 280. And we'll get those EIA numbers in about 8 minutes and see where that shakes out. But some decent trades when you're really talking about, you know, when we list these and we say, just to put things back, you know, the 11 AMs being 23, that's 2.3 pennies.
Right. Because
these trade in like tenth of a penny ticks. So you need 2.3 pennies away from 280 becomes your break even in either direction. We'll see what happens.
And let's go take a look at that contract, because this contract really moved around a lot yesterday. Let's see what it's doing out here today. So we got 279. Is that the same contract?
No, I don't think it is. I think we're looking at June.
Okay.
We are. We're looking at June on NADEX.
Okay.
So we'll just keep things in context. So they're priced a little bit differently.
Yeah.
However, they do move. They're going to move the same amount probably, but the June contract may be the current one, just looking at that chart.
So that's interesting. So yesterday we had 4 pennies movements. The high out there was 278. The low was 275. I believe this thing was pushing with volume yesterday into the swing point. Well, see, this contract's not, but that's the May contract. Maybe the June one was. Well, the way this contract's laid out, you know, we'll see whether we get 4 pennies, because 4 pennies would give us movements, would give us a profit on any one of those trades.
It would. We're trading at about 281.5 right now in the June contract. So even if we trade to the downside, that would be about break even.
Right.
Because that would push us.
0.37, yeah.
You know, these have a little bit of a bullish bias. Now, as time goes, it's taken a little bit back towards 280, just as this bar. But you have about a penny of intrinsic value to the bullish side. So you got a little bit of a head start to the bullish side in terms of profit potential. But pretty much exposure in both directions and not too bad of a cost, factoring in that we're going to get some numbers in about 7 minutes, and then the market may react, and we'll see if it reacts to the tune of about 2 to 4 pennies to crack it in.
Welcome back, folks. We got a little spike here. EIA says natural gas stockpiles fell 18 BCF.
So the estimate was a decline of about 11 BCFs. We got a decline of 18. That's the reason probably for the initial spike upwards. We spike up to about 283. That bar pulls back to 282, and from there we're bouncing around. But what's interesting is that's kind of where we had the head start, right? Because most of these contracts started at, not most, all of them started at 280. So it was easier to recoup our profits, getting a boost upwards, because we already had some intrinsic value in the positive spreads, the bullish spreads. So right now, even jumping around the 11 a.m.s, here's your 11 a.m. You know, you could sell that one right now for 28. I believe that was costing us 23. Yep. And just to pull back, where are our noons? Well, even, come on.
That's noon.
Yep, there's our noon bullish spread. So that one, we're getting 30. That was going to cost us about 27. So when you get a pop in your direction, that's always nice. When you get a pop either way, right? You're trading volatility, you get a jump. And when you get it in the way that you may have a little bit of intrinsic value on your side, that always helps as well. So yeah, trading right now 283.3, and you know, most of these, and let's just see where that 230 as well. There's our 230 bullish spread, and that one is pretty close to break even. That was going to cost us 37, and would be able to get back about 36 right now.
Yeah.
And you know, these are pretty affordable priced as long as you get some action.
Yes.
And it's not always guaranteed. I mean, look at the chart. That's a decent price action when we've just kind of been hanging around. Like you said yesterday, the spread was about 4 pennies. Well, we just got, you know, 2.5 pennies in the span of 8 seconds, right?
And supposedly, I mean, when I talked to Andy Hecht, I'll be talking to him again today, this is one of the first years that normally you wouldn't be withdrawing anything. The season's over.
The stockpiles will begin to grow as we come out of the winter and so forth.
Right. You know, so bottom line is that, you know, we'll see where this is going to go, but that's a big number.
Yeah, so there's your weekly net change, and they were looking for about a decline of 11, and they break it down completely, and it looks like the Midwest is where they're taking it all.
Our man Jim from Minneapolis, he was calling it was 0 degrees, right? It was snowing, right? That's,
because you do see, even in the Pacific, there was an add to the stockpiles.
Yeah.
In the mountain region as well, the East was almost break even, but the Midwest, they're using up that natural gas.
Yeah.
So we'll check back in, see how it does.
Pretty wild. Let's go over to the natural gas market, take a look at where we are right now. Yeah, so look at that baby.
A little bit of an acceleration to the upside. What's interesting is that we spiked right up to almost this level, though, right after the news, right? And it's been oscillating a little bit, but approaching 284 now. And as those numbers continue to climb, so we looked at the 11 a.m.s. Those, of course, will be expiring in 5 minutes from right now.
Yeah.
These are the 230s we have up, but I like looking at the noons in particular because those, that's your 11 a.m. So again, the 11 a.m., trading pretty much what we're at. That would have gotten you about $36. That was going to cost us 23.
Right.
And you know, you could just let it ride out until expiration right now if you wanted to for the next 5 minutes, or you could close it out right now if you wanted to. And then I'm trying, where are our noons? That's the bearish one. Let me just pull them up because I want to see where the noons are trading at as well right now. So natural gas, the noon expirations, the bullish spread would be the one with most of the value right now. And so that one we're looking at about $37. Yeah, and that was going to cost us 27, right? So, I mean, when you get a decent price action in the direction that you already have intrinsic value, 280, there's 280 on the graph, the chart, that's where we're going to have profit potential away from. So we had a head start to the positive side. That's the move that we got, which is nice. And so, yeah, any of those trades would have turned out to be a nice trade today. And we'll see where they shake out, though. I say that right now.
Yeah.
You still have till noon. You know, if you want to close that out, you can close that out, lock in your profit, and then you would still have the bearish spread below 280 for anything, you know, and the likelihood of that, maybe not too likely, but guess what? You lock in a profit, depending on your market reaction. Maybe you don't think it's going to go too much higher. You're saying it'll lock it in, and maybe it pulls back.
And we have had, in the energy market in general, we've had good volatility.
Multiple reversals, for sure.